Gold and silver trimmed an overnight rally in London trade on Wednesday, as betting rebounded that the Federal Reserve will cut dollar interest rates yet again in December after new data showed US inflation staying lower than analysts feared, ahead of Donald Trump retaking the White House. The core measure of consumer price index inflation, excluding food and fuel, rose in October to 3.3% per year, the fastest since May, but still only 0.1 percentage points above this summer's three-year low in core inflation. Odds on the Fed cutting rates by another 0.25 points to 4.33% per year in December leapt on the data, rising from below 3 and 5 to stronger than 4 and 5, according to futures positioning tracked by derivatives exchanged the CME's FedWatch tool. Gold spiked to $2,615 per troy ounce as the dollar eased on the currency markets, trading $25 above Tuesday's 8-week low before easing back to $2,604. Silver, meanwhile, spiked through $31 per ounce, rallying 2.7% from yesterday's 5-week low before edging back to $30.75. That still left gold priced in dollars 6.7% beneath Halloween's pre-election record, with silver now 11.9% below mid-October's 12-year peak. The swift move lower in gold post-election ran counter to our strategists' expectations, says a note from U.S. financial services giant and London bullion market maker J.P. Morgan. However, they think the sell-off is a stumble, not a sea change. New York stock futures rose ahead of the opening, edging the S&P 500 index back towards Monday's new record, high above 6,000 points. So-called cryptocurrency Bitcoin, meantime, rose towards $90,000 per unit, gaining almost one-third since Trump's victory a week ago. European bourses slipped in contrast, while the euro price of gold held above €2,460 per troy ounce, down 4.5% from its end October record. Gold prices in UK pound terms, meantime, rose above £2,050, still £100 below Halloween's gold price record. Industrially useful platinum, in contrast, held near 2-month lows, trading at $944 per troy ounce in US dollars, while sister metal palladium slipped to the very same price, hitting new 9-week lows. Gold's $200 plunge since Trump won the White House last Wednesday morning was driven by near-term position squaring in a well-subscribed pre-election trade, says J.P. Morgan's note. It isn't a break in JPM's thesis that a Republican sweep of government will likely continue to fuel further upside for gold in 2025 as the debasement trade rumbles on. Washington's 10-year borrowing costs fell further today from last week's 4-month highs, edging back to 4.37% per annum after the headline pace of U.S. inflation accelerated only 0.2 points to 2.6% on today's new CPI data from the Bureau of Labor Statistics. With the federal government's outstanding debt already topping 120% of the USA's world-leading annual economic output, current Vice President Kamala Harris's plans would have increased the national debt by $3.95 trillion over the next decade, said analysis by nonpartisan, nonprofit think tank, the Committee for a Responsible Federal Budget, ahead of the November vote. President Trump's plan would increase the debt by $7.75 trillion. Tax-related promises made by Trump point to additional risk to our deficit forecast in 2025 and 2026, said ratings agency Fitch, following the Republican candidate's sweeping win last week. Today data confirms that inflation is heading lower, said Minneapolis Fed President Neil Kashkari today, following the BLS release. Please like this video and subscribe to our channel.